you keep your eyes on the prize, which is gold at $10,000 or $15,000 an ounce and silver at $200 an ounce, when the currency reset becomes a thing, that today's prices are kind of a gift. One last chance to get into some of these miners before they take off on their long, glorious arc to five baggers from here or whatever. So, I'm getting more and more confident that now is a good time to be adding to precious metals miner portfolios.
Silver is just becoming, more mainstream and not gold. And I think that's really what we needed. And that's what I think ultimately will take silver to triple digits, in the 200-300 range. I don't know how long it's going to take. It took me 16 years to be right, or 14 years, I guess, to be right on my triple digit prediction. So I'm not going to tell you when I think I'm going to see much, much higher prices, but I do think it'll happen.
Keith Neumeyer and John Rubino discuss the long-term outlook for precious metals, arguing that gold, silver, and mining stocks could benefit if global monetary conditions continue to shift. They suggest that current prices may represent an attractive opportunity for long-term investors, while emphasizing that projections such as $10,000 to $15,000 gold or $200 plus silver are speculative scenarios rather than guaranteed outcomes. The conversation highlights growing mainstream interest in silver, confidence in precious metals miners, and the potential for strong gains if investor demand accelerates. Both stress patience, disciplined investing, and maintaining a long-term perspective amid evolving financial markets. Now we present the clips from their interview. Subscribe Now Metal Moves for daily updates on precious metals, economic trends, and wealth-building opportunities. Stay ahead of the financial shift and never miss a market-moving alert.
It's been a serious correction in precious metals. Gold and silver went down dramatically and for a long time, and then the miners got whacked. There's a lot of miners out there that are down by a third or more. Some of them are down by 50% over the last 3 or 4 months. And so that's, if you assume that precious metals are in a long-term bull market, which is hard to deny because their value basically depends on what governments do with their currencies, and governments are taking on too much debt, which leaves them no choice but to inflate away their currencies, which is great for gold and silver. So long-term bull market, and this was a dramatic correction within that long-term bull market, but it's gone on for a while. It's pretty well advanced. We're moving out of the negative seasonality part of precious metals and into the months when usually they see some Asian demand, which usually elevates the price and everything. So I think there's a decent chance that we've bottomed. No, not a guarantee, but I think it's not a bad time to be picking up some of these mining stocks that have gotten much cheaper lately. And that's what I'm doing. I've got, low ball bids on some of the miners that have really gotten whacked. And if they drop another 10%, I'll get some more shares and things like that, which is how you want to behave at the bottom of a bull market, or I'm sorry, of a correction in a bull market. And so we'll see. Again, no way to know for sure, but I'm feeling more and more comfortable with precious metals and with the miners just because they've had such a long correction. So we'll see. But I think if you keep your eyes on the prize, which is gold at $10,000 or $15,000 an ounce and silver at $200 an ounce, when the currency reset becomes a thing, that today's prices are kind of a gift. One last chance to get into some of these miners before they take off on their long, glorious arc to five baggers from here or whatever. So, I'm getting more and more confident that now is a good time to be adding to precious metals miner portfolios. I think gold and silver are at really trustworthy support levels right now. Gold is bouncing off 4,000, which is a big round number where there's probably a lot of buy orders in. Silver is not far from $55 an ounce, which is another reasonably dramatic number in trading. And so, I'm basing my adding to my precious metals mining portfolio just based on the fact that we have much bigger numbers out there somewhere. So almost any time now is a good time to be buying. But this is an unusually good time because we've got support, we've got seasonality, we've got, like you said, gold and silver will rally if we end the Iran war, and Trump's under a lot of electoral pressure to make that happen. It's really in his interest right now just to declare victory and pull out, just get it over with, let gas prices go back down before the election. So there's a lot of reasons to expect positive news from the point of view of gold and silver in the not too distant future. So yeah, that's those are the reasons that I'm seeming reasonably confident that gold and silver are going to do okay from here. And we'll see. But I started out putting stink bids on a lot of the miners at higher prices as they were going down, and I got a lot of those. So there's just a couple left that are down around these levels, and if I miss out on those, I'm basically happy because so many of the other ones got taken. But we'll see. It could be one more correction gets me completely out of buying the miners from here, and I'll just sit back and hope to watch it go up from here. I think energy is a good thing to own long term, but you do get these fluctuations because of geopolitics, right? And so, Exxon pays a good dividend. It's making a lot of money at today's prices. Might as well own it. And same for gas pipeline stocks and the other high quality oil companies. So I think everything related to energy, just about, is in a long-term bull market right now, just because we are so short electrons right now. We really need to build out the grid. Even if there was no AI bubble right now, even if the hyperscalers weren't doing what they're doing or anything, we still had an inadequate electrical grid going forward. We still needed more energy prior to the AI bubble, and that just turbocharged the process. So I think the high quality solar companies, the oil companies, the gas companies, all of these guys, of course, the uranium companies, all of these stocks are probably good to own right now, just because the long-term trend, the really serious fundamentals are pointing towards more investment in the grid and in energy in general. And that's going to help their stock prices.
John Rubino believes the recent decline in gold, silver, and mining stocks represents a significant correction within a broader long-term precious metals bull market rather than a definitive trend reversal. He argues that expanding government debt, persistent currency debasement, and improving seasonal demand could provide a supportive backdrop for gold and silver over time. Rubino also sees value in quality mining stocks following steep pullbacks, while emphasizing that no market outcome is guaranteed. Beyond precious metals, he highlights energy, uranium, and grid infrastructure as sectors with favorable long-term fundamentals driven by rising global electricity demand and ongoing investment needs. Let's get back to the interview.
You look at the 10-year chart, and it's available on the Silver Institute's website. Actually, you can look at our website, and if you go to First Majestic's corporate presentation, you'll see a chart on second or third or fourth page of the presentation, and it shows you 10 years. And silver productions fluctuated in 2016. So the mining sector produced 880 million ounces that year. During COVID, 2020, it dropped to 780 million ounces. Today, it's 830 million ounces. So if it's basically flat-lined for 10 years. It's, anywhere between, 825 to 850, call it, every year, same as it, and it's not going to change. And there's lots of reasons why, if you want to talk, China, much of the Middle East, much of Asia, Russia up until, the current conflicts, were were big buyers of gold and many have continued to buy gold. And India, China, continually buy vast amounts of gold. So, that's created not only a bid in the industry, like a bid on the price of the metal, because they're consuming. I saw some numbers that it's 30% of annual production was purchased by the Chinese and so far to date in 2026. Whether that's a correct number or not, it's a number I did read. So. That's a lot of silver, a lot of gold, going to one buyer. And if you add up all the other buyers around the world, and they're all central banks, that number can easily be north of 50% of the gold just going into central banks. And that's pretty interesting. That did not exist a decade ago. So, that creates a floor, in the current price of gold. And then the upside, of course, is other things like investors get excited, investors that want to put gold away, in permanent storage, for protecting their net worth, their family net worth, become buyers, and we're seeing that. So, yeah, I think to your question, it's already happening. What we call NAFTA over here. Which is a trade agreement between the United States, Canada, and Mexico. Under the current administration, they don't seem to think it's worth the paper it's written on, but nevertheless, it does protect, industry in North America to some degree. And when there was some rumors, I guess, I don't know, a year ago or maybe longer now, that there might be a tariff put on silver and gold, that was quickly rebuffed because that did show up in the internet, and there was some posts I saw on X about that topic. Yeah. And within days of that, the U.S. government came out and said, no, we're not tariffing gold or silver. Right. So, that's I would have been surprised if they would have done that because, the United States is a huge importer of silver. They don't currently produce enough silver in the U.S. to actually feed their industry. They've got a lot of window manufacturing, microwave ovens, freezers, you name it. The U.S. produces a lot of stuff that requires silver. And so for them to put a tariff on it would just be shooting themselves in the foot. Well, I think that's one of the reasons why gold prices have come down. I think that, with, what I'm hearing, over there, and, I know people that have moved into that region of the world, from Europe, for example, going to a better climate, potentially a better tax jurisdiction, and they move their families and, they bought real estate, over the last, several years, and now they kind of regret it. And the revenue is not coming into those regions as it used to. The investment is pretty well dead, and the tourism industry is pretty well dead. So there's a lot less income coming into those countries now, and they're selling gold, to make up for that difference.
Keith Neumeyer highlights that global silver mine production has remained largely flat over the past decade despite growing industrial demand, suggesting supply growth remains constrained. He also points to continued central bank gold buying, particularly from countries such as China and India, as a key factor supporting long-term gold prices, while noting that specific purchase figures reported in the market should be viewed cautiously. Neumeyer argues that strong industrial demand makes tariffs on silver unlikely in the United States because of its reliance on imports. Overall, he believes supply constraints and steady demand continue to support the long-term outlook for precious metals. Let us know your opinion on this analysis in the comments below. If you enjoyed this video and found it valuable, make sure to subscribe and enable notifications so you never miss our latest updates on gold, silver, crypto, and global markets. Thanks for watching The Metal Moves. We'll see you in the next video.